if it's, you know, if we drop down to 40, once again, this is total hypothetical right now. I don't believe that we're going to these levels by any means, but if we do get to there, you know, I wouldn't be panicked, but it would, you know, be something it's something I guess everybody should be prepared for, right?
Yeah.
But anyways, so let's just say we drop down to 40 and that makes this the new low. Those levels kind of increase a little bit. Or I guess they would decrease down to 52. But what I'm stating here is that if we would get to those levels, man, everybody would start panic selling right here, right? If we break into 39 and you know and change, everybody would be panic selling.
Yep.
And when in reality, you know, you would want to wait for that bounce no matter what, right? So even if we're not going to bounce from here, if we do go all the way down to 39, you're going to want to wait for that bounce because that bounce is going to at least come up to this 0.5, and that's about 52K. If we get all the way down to there and we, you know, rally up to 52, you know, that's where anybody that's, you know, panicked about the market or not sure or, you know, can't handle risking the downside if we are going into a bear market, like that's where you would really want to consider exiting, right? So, and between there and 58, whatever that, you know, whatever that's going to look like. And that's only if we go down to 40, you know, right now, those levels technically are 50. Sorry,
but you're using historical precedents to say that we should get it, even if it does do that, that we will get the relief rally or the dead cat bounce, because that's how these institutions like to play it. They like to have that one extra bit, that nice big run towards the end. It gets a bunch of people back in and promotes and leaves them holding the bag, right?
Not necessarily. I mean, not necessarily like a historical like institute. I mean, that's just like a normal market structure, right? You get these massive drawdowns, and just as we go up, right? You don't just go straight up, right? You get these drawdowns. So you know this is considered. You know, if we were going into an elongated bear market to the downside, this would be considered a correction to the upside, basically. Just how these are considered corrections to the downside.
Gotcha.
So
yeah.
That's just, you know, because with this, you know, we've already fell 40%. So, I mean, it's, you know, going lower is totally possible. But more than likely you would see if, you know, big if, once again, if this was, you know, the end in the bear market and whatever, you would see at least a rally up towards this 50% area. Maybe you get rejected from there and you continue lower. And then all in all, this downtrend would, you know, end up being like 70%, something like that. You get another bounce higher and so on and so forth. Right. And a perfect example of that is, well, I'll just take a look at, I think this is one that Blockchain Backer brings up all the time. Right. So this is 2017 when the market topped, and same deal. So from the high to the low, right. You can see where the market recovered to before we fell. And it's essentially came right up to this 0.702, a little breach past there. Well, actually, we'll look at right here. First of all, you came up to the, you know, the 618, then you came back down, then you actually came up and cleared this 702, couldn't break that all-time high. And that's what takes you down. So I know that's what he recommends. But what in general, though, what I'm saying is that, you know, you never want to be selling at these low lows, even if, you know, for example, if we're here and we do fall a little bit lower, you want to wait for that relief rally because it's going to happen. And generally what happens is that most people are going to sell at that exact low because they're going to be so afraid that it's going to just continue lower. And then more than likely, you know, if this was to become, which once again, I mean, I can't say enough. I don't think that this is the bear market by any means. I do feel we're going to continue higher, but we'll see how, you know, obviously the market develops.